Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian equities fall and oil rises to a 6-month high as escalating tensions in Iran weigh on sentiment. President Trump warns Tehran they have 15 days at most to reach a nuclear deal. This as the U.S. assembles a vast array of forces in the Middle East. Plus, President Trump says his Board of Peace has received about $17 billion in pledges towards humanitarian and reconstruction efforts in Gaza, $10 billion of which will come from the U.S. Well, it's just gone 9 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. Well, today the focus, not just for the region, but also for markets, is on geopolitics. It's rare that you see an impact on regional geopolitics on some of these global markets, but that is indeed what we're seeing with the handover from Asia-Pacific today. The MSCI Asia-Pacific down 0.4%. Hong Kong back for trading after Lunar New Year, and it hasn't been a very robust session over there. So moderately cautious session coming through from most of these Asian indices. Though the Kospi market continues to outperform, as we've been flagging, that South Korean index continues to do quite well. S&P futures leaning towards positive, however, up 0.2%. And today, a special focus will be on the data that's coming through. Remember, we have those PCE figures coming on later in the afternoon. That's a big focus for the Fed, in addition to fourth quarter GDP and Fed PMIs as well. So all of that data to watch out for in the U.S. coming up this afternoon. The USD, also, this is the Bloomberg dollar. We are ticking higher this morning, up 0.1%. And it's sort of been ticking up moderately higher every day for the past week, which actually belies the bigger move, which is that it's jumped almost 1% this week. And this has been its biggest gain since last October. So with all of the geopolitical uncertainty and some of the hawkishness that came through from those Fed minutes, we have actually seen some support for the USDs come through. And then oil, obviously keeping a close eye on oil. Brent this morning, $72 a barrel, up 0.5%. And once again, heightened speculation that the U.S. is prepping itself for an attack on Iran. We're going to talk more about that shortly. But switching over, one chart that I want to flag to you, which probably flew a bit under the radar yesterday. Take a look at this. This is the U.S. trade deficit for 2025. And what does it tell you? It's still very large, and it's almost as big as it was back in 2024. And in fact, the imports figures from the U.S. are the largest import figure ever in history, which also tells you that the tariffs didn't actually deter U.S. consumers from buying from abroad. So this is very noteworthy. The fact that one of the stated goals of applying those tariffs was to help reduce the size of the U.S. trade deficit. Well, guess what? It stayed just as large in 2025 as it was in 2024. So this really caught my attention yesterday. Something to think about. Anyway, let's move on and talk about geopolitics in the region, because tensions are growing once again in the Middle East as U.S. President Donald Trump ramps up pressure on Iran for a nuclear deal. The U.S. military is gathering forces in the region, including 2 aircraft carriers, fighter jets, and refueling tankers. President Trump has now signaled limits to the diplomatic process, setting a deadline for Tehran to reach a deal.
We're either going to get a deal or it's going to be unfortunate for them. I would think that would be enough time, 10, 15 days, pretty much maximum.
Joining me now is Paul Wallace, Bloomberg's managing editor for MENA Economy and Government. So 10 to 15 days, that is the window to get a deal done, Paul.
That's what it seems like. And you know, in many ways, the Americans have been quite consistent about this over the last few weeks. The last big thing between Iran and the U.S. were talks in Geneva on Tuesday. And after that, the White House kind of implied that it would wait for roughly 2 weeks for Iran to come back with written proposals about how to bridge their gaps. And then they would, you know, if that was acceptable to the Americans, they would go to a third round of talks. But of course, there are some people thinking that Trump might be calling Iran's bluff, trying to lull it into a false sense of security. The military buildup in the Middle East continues to ramp up. I mean, the U.S., I don't think it's an overstatement to say it has an awesome amount of power in the region already in terms of naval vessels and fighter jets. I mean, this is pretty much the biggest buildup anywhere in the world of you know, U.S. U.S. Military arms and everything since 2003 in Iraq. Yeah.
So, Paul, okay, so that's happening as we've been discussing this week, and there's been a massive deployment of U.S. military assets to the region, still ongoing. If you look at all the flight tracking data as well, but on the flip side, what has the Iranian response been? Because on Monday we heard from the Iranian foreign minister suggesting that actually talks had been quite constructive.
Exactly. We heard that on Monday. The Iranians spoke to the UN nuclear watchdog, the IAEA, said talks had gone well. They said the Geneva talks went well. So the Americans said the same thing about the Geneva talks broadly. You know, Steve Witkoff, who's leading the American delegation with Jared Kushner, Trump's son-in-law, they both pretty much said it was okay. The Iranians haven't, you know, I say they've been fairly calm about the build-up. I'd say that in the last week, they haven't reacted too much to the most recent announcements from the Americans and the most recent stuff they're doing. Of course, they have kept saying, the Iranians, I mean, they have been fairly consistent too in saying that if the US strikes, then that means essentially all options are on the table for them. US military bases in the Middle East and Israel could become targets. The Supreme Leader, Ayatollah Ali Khamenei, has said that there could be a regional war if America decides to strike Iran. So things are still very tense, but at least publicly, both sides are essentially saying we will give diplomacy a chance. We will give these talks, you know, we'll make the most of these talks.
Yeah, you know, Paul, my mind goes back to last June where President Trump said something similar. And at the time, he said there was a 2-week window for negotiations. And then they struck. A few days later, it was only 2 to 3 days later that they launched Operation Midnight Hammer. So I think the region very much on high alert going into the weekend. Paul Wallace, Bloomberg's managing editor for MENA Economy and Government. And speaking of the reaction that we're having on markets, I just want to flag what's happening with oil prices. Obviously now sitting at a 6-month high, Brent at around $72. But take a look at what happened back in June of last year. And interestingly enough, and you can see going back to June, that little yellow circle, the Iran strike was a sell the news event. So we actually declined from the close into the weekend. It happened over the course of the weekend. And then when we walked in on Monday, prices actually dropped. Why? Because at the time, oil infrastructure wasn't actually targeted. So that was met by a bit of relief from the markets. And you can see oil actually isn't at the level that we were going into the weekend of June 2025, but getting close to those levels, $72. Let's talk about all of the price action in oil markets. Joining us now is Anthony DePaula, our Middle East energy reporter. Anthony, so why don't we talk about exactly what oil traders are pricing in terms of geopolitical premium to oil right now?
Good morning, Jumana. Yeah, as you said, we're trading over $70, just around $72 now. And that's pretty much at the top end of the risk premium that a lot of analysts have been talking about, you know, somewhere from $3 to $10. And we've been seeing that priced in over the last few weeks there. And so we're kind of at the top of that level based on where we started when this came in. And that's pricing in the risk of some sort of action going on. Most of the analysts that we've been hearing from will say that if there is an actual interruption to oil supply, we could stand to spike even higher than that. Of course, the market will react, as we saw that reaction in June when people were concerned. There was a more domestic-focused Iranian gas plant that was hit, didn't affect imports, and then prices came back down. So people will assess what's hit, whether that hits production or any export capacity or any of the other Gulf countries, Jumana.
Okay, so let's talk about the potential OPEC Plus response to all of this. And in the hypothetical situation that oil infrastructure in Iran is actually hit, and we see that spike upwards in oil prices, over the course of the last year, OPEC Plus have actually put back more than 1 million barrels back to the market. How much spare capacity are they sitting on right now, should there be a need for them to come back in and supply the market with extra barrels?
Yeah, that's a good question. And the answer is that it's tight. Saudi Arabia is pumping around 10 million barrels a day, and they're alleged capacity is 12 million barrels a day. There's their sustained long-term capacity. So that leaves roughly that 2 million barrel window there of spare capacity that the Saudis could bring on, and it's pretty much the Saudis that have the spare capacity. The UAE's OPEC production quota is much lower than their actual capacity. There's a lot of speculation in the market from analysts and traders that they're actually producing much higher than that. So the question mark is around how much spare capacity they actually have. Kuwait's got some, but they might be slower to ramp up. So it's really Saudi Arabia. And then the risk is, if there is an attack on Iranian infrastructure, do they then try to close the Strait of Hormuz? Do they try to strike out at some of the other Gulf exporting infrastructure? And could that then hit exports? Of course, Saudi Arabia does have a transnational pipeline that runs from the east, where most of the fields are, to the west, where they have the Red Sea. So they can export some oil through there. Of course, that oil pipeline then creates another target, but they do have that capacity. The UAE also has a pipeline that runs to Fujairah, which is on the Indian Ocean side of the UAE, but it's also quite close to the Strait of Hormuz. So there's a lot of assets there, but those assets then, in a broader war, the risk is that they become target, and that's what the concern that we're seeing a lot into that oil price so far, Jumana.
Hence why we're at a 6-month high. Anthony DePaula, our Middle East energy markets reporter, thank you so much. Well, coming up, OCBC joins us with their outlook on the dollar and U.S. inflation as Fed officials display a new hawkish tilt. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The dollar is poised to notch its best week in 4 months as traders pare back expectations for Fed interest rate cuts, while geopolitical risks boost the currency's haven appeal. Joining us now is Selena Ling, Chief Economist and Head of Global Markets Research and Strategy at OCBC Bank. Maybe let's just start with the U.S. because we've had a bunch of data drop this week and the Fed minutes coming out more hawkish than most people had anticipated. How do you think this creates a setup for the Fed into the second half of the year?
Well, it's interesting that you asked that because the labor market data downside risk was clearly fading, and that was quite clearly highlighted in the FOMC minutes earlier this week as well. So we've got a chance, that labor market risks are kind of being downplayed. Inflation risks may be creeping a little bit higher. The Fed is in pause mode. And of course, the Middle East tensions kind of add to the allure of the dollar in the short term. So going out into the middle of the year, I think markets really still looking for one more cut from the Fed, and then possibly a second cut towards the end of the year. Of course, things are changing very rapidly. I think the whole new Fed chair coming on stream in May itself probably opens the door after the temporary pause that we are seeing right now. We still have our house view thinking that, we could see a cut probably a little bit earlier than middle of the year, but it's very much data dependent. So we'll be watching out, for instance, the core PCE data coming out, later as well.
Yeah. Selena, earlier in the show, I was showing a chart of how wide the U.S. trade deficit is, which tells you that U.S. consumers were not deterred by tariffs. The other big event to watch out for at some point in the next few days, we should get that Supreme Court ruling on the legality of Trump's tariffs. Is that likely to have an impact on markets and investor sentiment, you think?
I think it would definitely have an impact because the ruling could go either way. I mean, in the off chance that, we've got the ruling saying that, the legality of the IEEPA tariffs are in question, then of course markets will probably rally for risk sentiment. I think that's the case. We could possibly see tariffs being unwound a little bit, and I think that should be good for growth and in turn good for equity markets. On the flip side, of course, if nothing changes, it's the status quo, then probably life go on and you'll feature a little bit more on the data dependency side, and also depending on how the developments in the Middle East, especially for Iran, actually pans out from here.
Speaking about geopolitics, do you detect appetite for the investor community to actually start putting on hedges in case this really does escalate into something broader in the region?
Well, actually, if you look in history, a lot of the past geopolitical events tend to have a temporal effect on financial markets, meaning that, like today, we've already seen the reaction in the oil price and gold prices due to this heightened alert on the Iranian front. But generally, I think it probably should settle and pass if we don't have a further deterioration in terms of the Middle East, arena. It's hard to say at this moment, given the headlines are still coming out. But I do think that probably if there's no further deterioration from here, then markets will kind of settle back and then reposition again for what are the more medium-term structural trends beyond just the geopolitical headlines.
Yeah. Selena, one of the other big phenomena this year is the massive outperformance of these Asian indices. I was talking about the Kospi earlier, but it is quite stark if you compare the performance to European equity markets and U.S. equity markets. Is that stock market performance actually translating to a higher growth outlook for Asian economies as well?
Well, actually, we have seen a lot of the fourth quarter numbers come out from Asian economies, and they have tended to surprise quite sharply to the upside, resulting in both an upgrade to the full year growth performance for 2025, but also leading to upgrades in expectations for 2026 growth as well. A lot of it, of course, is due to the whole AI boom, creating demand for high-end chips and, of course, data centers and a lot of the semiconductor-related type of story. But on top of that, the growth performance suggests, that this growth momentum still has legs to run, at least in the first half of the year. And if you see, a lot of the Asian central banks have also switched to a pause mode. They have stopped cutting interest rates, with probably the exception of BSP yesterday. MAS was clearly on hold, a rhetoric sounding a little bit, more hawkish. So, of course, we are also looking for potential monetary policy tightening, maybe in the second half of this year. And that would probably materialize through a slight slope steepening for the trade-weighted senior. Similarly, Bank Negara, because of the growth outperformance, we have also removed our expectations for a cut by Bank Negara later this year as well.
Right. Selena, thank you so much for joining us. Selena Ling, Chief Economist and Head of Global Markets Research and Strategy at OCBC Bank. Well, Christine Lagarde has told the Wall Street Journal she expects completing her mission as president of the European Central Bank will take her until the end of her term. This after a recent report suggested Lagarde will resign early to allow the French government to help pick her successor before next year's election. And coming up, Nigeria moves to redirect oil revenues to shore up its public finances. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. Nigeria is moving to shore up its public finances by ordering the state oil company to share more of its oil and gas production proceeds. Under a new directive signed by President Bola Tinubu, income from production sharing contracts will now flow directly into a federation account for distribution across all tiers of government. For more, our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Jen, this seems to me like quite the shake-up in terms of how oil revenue is distributed. What does the directive actually say? What does it do?
Certainly, Jumana, especially if you look at how the NNPC, which is the state-owned oil company, how it was structured. So the reason why it was able to, as President Tinubu says, able to trap revenue was really because it was operating as both a commercial entity and also a regulator. And so what this executive order does, as you were just alluding to there, it directs the NNPC to stop withholding funds, centralizes all of some of these production sharing income that is coming in from a lot of these oil and gas proceeds directly into what is called the federation account. And that account will then be the one to distribute between the state, the local, and also the federal government. He is hoping that this gets to a lot of the reforms that he had instituted back when he first came into the presidency just a few years ago. But really, it seems like he's trying to do away with a lot of the red tape and the bureaucracy that the NNPC was operating in before. It's not only that, though. ago. He's doing away with some of these fees that the NNPC had instituted, which was 30% for management of some of these contracts, and then also 30% for exploration. So hopefully cutting down some of the income that was trapped essentially in the NNPC, distributing it out more for development within the country.
And you mentioned, President Tinubu has been in power for a couple of years now, has implemented many reforms. Yeah. Why was it necessary for Nigeria to also reform the way oil revenue is collected?
Yeah, if you take a look at oil revenue in Nigeria, of course, they, like many other oil-producing countries, are trying to diversify, but it still makes up just over 30% of revenue. So it's very important for this economy. And then if you look at some of the statistics, revenue collection in Nigeria has been quite weak, really. And so some of the projections actually estimate that revenue, because revenue collection is so weak, a lot of the funds that are coming in and that is within the government is actually being used to pay off loans. And so it was needed to at least shore up some of the public finances and the public purse. Potentially, this gets to doing that. But still, it's going to take quite some time. If you take a look at some of the statistics that actually came out from the World Bank, Nigeria has one of the lowest tax to GDP ratios, making oil revenue efficiency critical for any sort of development. And we saw some of that statement being put out, some of those sentiments being put out when Tinubu put out this statement about the NNPC. So it seems like this is what he is trying to get to, and this is just another step in his I guess, effectively reform of the economy.
Jennifer, thank you so much for bringing us that story. Jennifer Zabazaj, our chief Africa correspondent in Johannesburg. Now for a look at some of the other stories we're following. Thailand has emerged as a key hub for Chinese-made drones heading to Russia. According to Bloomberg analysis, exports of unmanned aerial vehicles from Thailand to Russia have surged since 2022, mirroring a jump in drone imports from China. Beijing says that it does not aid Russia militarily. However, Chinese-made technology is routinely found in the battlefield in Ukraine. Bloomberg has learned that Europe's 5 biggest military spenders are set to jointly develop low-cost air defense weapons. The new initiative would develop autonomous drones and missiles based on lessons learned on the battlefield in Ukraine. The UK, France, Germany, Italy, and Poland will work together within the framework of NATO. And coming up, we're going to be talking about this price spike in oil. Oil prices rallying on the back of rising tensions with Iran. We are sitting at a 6-month high now for the price of oil, Brent trading at just above $72 a barrel here. Carole, Nakhle, the CEO of Crystol Energy, will be joining us next to talk us through it and the drivers ahead. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian equities fall and oil rises to a 6-month high as escalating tensions in Iran weigh on sentiment. President Trump warns Tehran they have 15 days at most to reach a nuclear deal. This as the U.S. assembles a vast array of forces in the Middle East. Plus, the risk of war mounts in the Horn of Africa as Ethiopia and Eritrea deploy troops and military equipment to the northern Tigray region. Well, it's just gone 9:30 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. Geopolitics high on the agenda this morning and heading into the weekend. That buildup of U.S. military assets, as we were just discussing earlier on the show, are really sending alarm bells across the world. And we're actually now seeing global markets react to it. The handover from Asia Pacific quite cautious this morning, down 0.3%. Hong Kong is back online after being off for Lunar New Year. So cautious handover there. S&P futures, however, leaning towards positive, up 0.3%. Attention will be focused on the PCE data coming out later today, GDP and PMIs. So a bunch of data dropping in the U.S. later this afternoon. The USD also seeing a bit of a bid this morning. This is the Bloomberg U.S. dollar. We're up 0.1%. We're up 0.9%, so almost 1% over the course of this week. It's been a while since we've seen a week of gains for the USD, but perhaps some of the hawkishness that's come through from those Fed minutes, in addition to geopolitical concerns, are actually bringing out a bit of a bid for the greenback. And then Brent, $72 is where we are at, up 0.6%. Old geopolitical premium. We'll talk about that in just a moment. And the terminal chart for today, one that I wanted to just briefly talk about, is the fact that the U.S. trade deficit last year came out almost as large as it did for 2024. And remember, this was a year where President Trump imposed those tariffs. And what this shows is that it didn't actually deter U.S. consumers from buying goods from overseas. And certainly there's been a redirection away from buying Chinese imports, but they've still bought from other countries, which means that the actual trade deficit is still substantial, just shy of $1 trillion. These are still huge numbers. So from this perspective, and only this chart alone tells you that perhaps one of the stated aims of applying the tariffs has not necessarily transpired to lower import volumes. So just going to leave that there. Okay, let's go back to talk about oil now, because prices have been rallying on the back of these Iran tensions, trading near 6-month highs. President Donald Trump said Tehran had 15 days at most to reach a deal over its nuclear program as the U.S. assembled a vast array of forces in the Middle East. Joining us now is Carole, Nakhle, CEO of Crystol Energy. So, Carole, I'm guessing that traders are really on high alert going into this weekend. How much geopolitical premium do you think is priced into where oil is trading, Brent at around $72 here?
Well, if I strip the geopolitics aside and I look at market fundamentals, I did not see many significant changes. So yes, we saw some disruption in Central Asia from Kazakhstan, but that was short-lived. We saw a seasonal disruption in North America with the cold weather. But apart from that, nothing major has happened on the market fundamentals. The only thing that has happened in oil markets and globally is geopolitics. What is happening today in the Middle East, we have not seen in decades since the invasion of Iraq. The buildup of military presence from the Americans in the Middle East is something quite worrying. And that by itself is keeping everyone on alert, nervously watching what could happen and allocating all sorts of probabilities to different scenarios. But so far from what I have seen, I think the highest probability today is being allocated to a military action on Iran with significant consequences on oil markets. So that's what is translating into these additional dollars that we saw being added to oil prices in a very short period of time. And we haven't seen the end of it yet.
Yeah, but Carole, for many jurisdictions around the world, Iranian oil is sanctioned. So I just wonder what the actual knock-on effects would be if you see a complete removal of Iranian exports. What does that actually mean for the impact it could have on oil markets?
I don't underestimate Iranian exports because they are still substantial, a few 100,000 barrels a day, depending. I mean, some say 500, some say a little bit more. But I don't think that what is causing the fear in the market today is the loss of Iranian barrels. That can be easily compensated for. The serious risk today that people are concerned about is the impact on oil and gas, LNG trade going through the Strait of Hormuz. This is, for me, is a real risk factor here, the trade for oil and gas. You have almost 25% of oil trade, global oil trade going through that strait, 20% of global LNG also going through that trade, and also not only the trade. What if Iran, let's say, in one of the many scenarios, what if Iran is attacked and it retaliates by attacking the infrastructure of its neighboring countries in the region? You're talking about Saudi Arabia, you're talking about the UAE, you're talking about Kuwait, you're talking about really major producers. This is where I would say is the worst case scenario. And that's why we are watching nervously about how the situation will unfold and what scenario is going to result in case there is a military action. So it's not really the loss of Iranian barrels that is worrying us.
Yeah, okay, fair point there. But at the same time, we have been talking for months about the massive oil surplus that's hitting the market in 2026. Should that not be enough to absorb any of the geopolitical shock that could emanate out of the region?
It depends on how bad the situation is going to unfold, because if it's just going to be let's assume it's going to be a military action, right? So if it's going to be a targeted, short-lived, as we saw, for example, last year, that will have a very minor impact. We might see a spike in prices only for them to be readjusted. But in the worst case scenario where trade from the Strait of Hormuz is disrupted, where infrastructure, energy infrastructure is attacked, as we saw, for example, in 2019, then that surplus might well turn into a deficit. Of course, it's not going to be long-lasting because the market is much more comfortable. I have not seen very high expectations for oil prices, as we saw, for example, in 2022, where even some were talking about $200 or $300 oil price. That is unlikely to be the case today. But if we have the escalation of the situation in the Strait of Hormuz, then we could see that surplus turning into a deficit and putting upward pressure on prices.
Okay. One thing I also want to ask you about, and I read about this in a report that Goldman Sachs put out this week. They've noted the huge rise in Russian, Iranian, and Venezuelan crude on water. But at the same time, they've also noted that as it pertains to OECD stockpiles, levels are still pretty low. We're not seeing that massive inventory buildup yet on land. Why is that the case?
Because you do have the sanctioned barrels. First of all, the sanctions on Russia and elsewhere, the enforcement of sanctions is being tightened. We saw how the dark fleet, several ships have been attacked in water. And we see also some conventional buyers of those sanctioned oil, primarily the Indians, moving away from maintaining their purchases, even if it's temporary. So we're seeing on the buyer's side, there is less appetite for taking the risk to buying those sanctioned oil. And that's why you're seeing this kind of build-up happening. You're not finding a market easily for those barrels. But given the history of oil markets and what we have seen over the years, sanctions barrels will always find a buyer at some point. Maybe today we have a dip in the demand and the appetite, but I think it's a question of time before it finds a home. We can always evade sanctions, but at the moment, the situation calls for a more cautious approach on the buyer's side. We're definitely seeing the Indians being much more careful. The Chinese are still maintaining their purchases, though they are facing a bit of a pressure from Venezuela because of the growing American influence there.
Yeah. Carole, always a pleasure to chat to you. Thank you so much for coming on our show. Carole Nakhle, CEO of Crystol Energy. Well, tensions are rising again in the Horn of Africa, with Ethiopia and Eritrea deploying troops and military equipment near the Tigray region. The buildup is fueled by lingering friction between Ethiopia's government and Tigrayan forces, as well as spillover from the ongoing conflict in neighboring Sudan. For more, we're joined by Bloomberg's Simon Marks. Simon, how serious is this military buildup?
Well, quite serious. The last war in the region only ended 3 years ago with a peace deal. And since then, large sections of that agreement just haven't simply been implemented. And so we're in a situation now where the regional government in the Tigray region is upset at the implementation of that deal. And meanwhile, the Ethiopian government has also seen large numbers of troops move towards that border in recent days and weeks. That includes heavy artillery, lots of men, and they're also shaping up with their air equipment, including drones. And we've also seen the Tigrayans now, unlike the previous war, joined by Eritrea. They are now supporting each other, ironically, even though Eritrea was committed horrific crimes inside the Tigray region during the last war, when they actually backed the government of Abiy Ahmed. So things are really at an all-time point of tension in terms of the recent years.
Okay, so the high levels of tension, if the conflict does reignite, what does it mean for Ethiopia, which has been going down the path of these economic reforms? They're undergoing an ongoing debt restructuring process. Could it set them back?
Most definitely. I mean, everyone you talk to, economists, analysts, they all say Ethiopia doesn't really have the money for a war. If it did go to war, there'd be huge costs. They're only just starting to recover from the last time there was conflict. The hangover effect from the COVID pandemic took a long while to sort out. And creditors are just beginning to see light at the end of the tunnel in terms of restructuring that debt. So it would really set them back a huge amount. The thing that Ethiopia, I think, is banking on, though, is help from proxies. You see proxy support in various conflict zones, not just in Ethiopia, but in Sudan also. You have the United Arab Emirates strongly backing Abiy financially in recent years. And likewise, his opponents have close ties with the likes of Egypt, which is obviously keen to set Ethiopia back because of its control of Nile waters and this massive mega dam. So this could easily fuel a war, nonetheless, just despite the economic situation.
Bloomberg's Simon Marks, thank you so much for bringing us that story on Ethiopia. Now for a look at some of the other stories we're following today. United Nations experts said Sudanese rebels who captured a key Darfur city last year targeted non-Arab communities in a bloody campaign that carried the hallmarks of genocide. They said the Rapid Support Forces militia was responsible for a systemic pattern of ethnically targeted killings, sexual violence, and destruction around Al Fashir. An earlier UN report found more than 6,000 people were killed over 3 days when the RSF took El Fashir. The National Bank of Rwanda delivered its largest interest rate increase in almost 3 years to curb inflation in the near term. The Monetary Policy Committee lifted the key rate to 7.25% from 6.75%. This brought total rate increases to 75 basis points since the central bank began tightening policy last year. And coming up, OpenAI says it has visibility into its future chip needs, even as the industry faces a supply shortage. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersechi in Dubai. OpenAI says it has visibility into its future chip needs, even as the industry faces a supply shortage. Chief Global Affairs Officer Crystol also told us that democratic nations need to develop shared safety standards for AI.
Democratic AI is going to prevail, or if the world's going to build out on democratic AI, I do think the world does need to work together collectively to make sure you're addressing and identifying the elements that are going to be needed. And look at, we are, and I know you guys talk about this and cover this, right, in a unique and perhaps challenging geopolitical moment where I actually have some optimism in terms of where the world's going, particularly democratic world, is that we all are going to have to work on this together. Democratic societies do need to start to develop shared safety standards on this technology. You're seeing emerging AI safety institutes, US, UK, Japan, Australia has an early version, India's thinking about an early version. And he talked about, can we think about this as some type of analog to the IEAA, the International Atomic Energy entity. But I think those are the types of I think muscles that we're going to really need to develop to ensure that democratic AI does get built. But inclusive within all of that too is how do we all work together, particularly on the supply chain piece.
But as it stands now, do you see this chip shortage deepening further? And will that slow down the AI build out? From your perspective, how does it look?
From our perspective, I think, look, we feel confident that we have visibility onto what we are going to need. Now, we also make sure we sleep with one eye open, right? Because you want to continue the old line, trust but verify on all of this. We ourselves are working with a variety of really strategic partners who are, really supportive of us in terms of access to chips. We ourselves think about how do we impart our knowledge on chip design.
OpenAI Chief Global Affairs Officer Crystol speaking with Bloomberg's Haslinda Aman in New Delhi. Now for a look at some of the other stories we're following today. The co-chief executive officer of Netflix says his company's acquisition of Warner Brothers Discovery will lead to more films in theaters. Ted Sarandos says it is likely there will be even more high-quality films for theaters if the deal goes through, as Netflix will use Warner Brothers distribution network. Netflix co-CEO Ted Sarandos says the streaming giant's bid to acquire Warner Brothers Discovery will offer great value to shareholders of both companies. He says a merger would lead to more films in theaters if the deal goes through, addressing a key complaint from Hollywood. Netflix is vying with Paramount Skydance to buy Warner's studios and streaming business.
but we think this deal will have a positive impact on the business for the long term. Remember, what we're doing in buying these assets is we've been creating original programming on Netflix for about a decade. They've been making original films and series for about 100 years. They have incredible IP, and we just happen to have a consumer model that can better maximize the returns on that IP. So I think it's a great long-term outcome.
Bloomberg has learned CVC Capital Partners is working with Goldman Sachs to explore a sale of Mediterranean marina operator De Marin. De Marin has a network spanning about 26 locations across Europe and the UAE and is one of the largest operators of yacht marinas in the Mediterranean and the Gulf. Coming up, President Trump says his board of peace has received about $17 billion for Gaza. More details next. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, President Donald Trump said his board of peace has received roughly $17 billion in pledges towards humanitarian aid and reconstruction efforts in Gaza, and that more than half a dozen countries have promised personnel to a stabilization force. Trump made the announcement during the group's first meeting in Washington. He said the U.S. would contribute $10 billion, which was a small price to pay to secure lasting peace.
The United States is going to make a contribution of $10 billion to the Board of Peace. Thank you. And we've had great support for that number. And that number is a very small number when you look at that compared to the cost of war.
We're joined by Bloomberg senior Middle East reporter Sam Daghir. Well, it was always going to be a big Trump event, the first inaugural meeting of his Board of Peace. The Board of Peace, part of that 20-point plan that the Trump administration released a few months ago, with the view that they will work towards Gaza reconstruction and lasting stability in the region. What did we get out of yesterday's event, Sam?
I mean, as you said, we got the usual Trump razzmatazz, the big show, the big numbers, the big revelations. I mean, that's kind of vintage Trump, as we say. It was interesting in terms of the people who were there. I mean, none of America's traditional European allies. Yeah. And if you look in the room, there was no UK prime minister, no French president, no Italian prime minister. None of these, traditional allies of America. It was more what one analyst described as middle powers, like Saudi Arabia, the United Arab Emirates, Turkey, who have basically partnered with Trump on this vision of a new world where things can be done outside of the traditional UN system, right? Which they feel which the Trump administration feel is broken.
Yeah, so we got a few commitments on the stabilizing force, the international stabilizing force. But one of the bigger questions, at least from Israel's perspective, is the pace of Hamas disarmament. And that has to be a big focus in the coming weeks.
I would say that is the question for Israel. I mean, it's front and center. And on Monday, before this Board of Peace meeting, we had one of the senior aides to Prime Minister Benjamin Netanyahu come out and say Hamas has 60 days. I mean, obviously, the Americans have not commented on that or confirmed that, but that's coming from the Israeli side. One interesting thing, I mean, that I observed last night was the High Representative of Gaza, for Gaza, who was appointed by the White House. His name is Nakhle Mladinov. He's a Bulgarian diplomat. He used to be at the Anwar Gargash Diplomatic Academy here in Abu Dhabi. He actually said the first thing we need to do is disarm Hamas. I mean, he spelled it out, and that sort of comforted the Israelis. But how you go about it is a whole different business, because you have certain countries in the Arab world who feel it has to be, as one Gulf official told me, it has to be linked to a political horizon, meaning, the steps towards a Palestinian statehood must be linked to the disarmament of Hamas. Yeah. And then you have countries like the UAE are saying, no, it has to happen now.
Okay, so this is what I was going to bring up with you, and you've also, you talk about it in your article. There was good representation from the U.S.'s Arab allies at the board yesterday, but within the Arab region, are there differing visions of how this should all play out?
Absolutely. And I would say the representation also sent a message, particularly the Saudi representation. It was the Minister of State for Foreign Affairs, Adel Al-Jubair. It wasn't the Foreign Minister himself, Prince Faisal. So that was interesting, a slightly lower representation. But the Abu Dhabi sent, Sheikh Abdullah, the Minister of Foreign Affairs, who, as you know, plays a leading role in all of this. He was the one who signed the Abraham Accords 5 years ago. So it's normal for him to represent the president at such, high-level events. So he was there. The Turkish and the Turkish foreign minister was there. The Qatari foreign minister and prime minister was there. So there are differences over, for instance, the Saudis are pushing openly, even saying this period has to be transitional. We don't want to establish facts on the ground, like these temporary towns and cities in Gaza that would somehow solidify this separation of the West Bank and the Gaza Strip. That's their greatest fear. And they feel like the Palestinian Authority is reforming and is reformed enough to come back as soon as possible, and that everything done in Gaza should be transitionary, for a short period. And here's where they differ with the UAE, which the UAE is saying, these issues of statehood are very complicated, particularly given that Israel rejects any talk of statehood at the moment. Why don't we just focus on improving the lives of the Gazans by, fixing their housing, providing for their needs, their humanitarian needs, their education need? That should be our priority now, to stabilize Gaza. But then you talk to experts, the rubble, of removing the rubble, I mean, that's a whole different issue. We're talking about
$70 billion.
Tens of millions of dollars.
Sam, thank you so much for bringing us that story. And with that, we end our show, Horizons Middle East and Africa. Stay with us. Daybreak Europe coming up next.